Hey everyone, it's Dan Heller here with Vectorvest Canada, and today I want to talk about growing your wealth conservatively, which might be very appropriate for the kind of market conditions that we are experiencing right now. Quite a bit of volatility and uncertainty. So we want to stick a little bit to quality and dividend payers to a certain extent anyway. And what I'm looking at is the model portfolio number 4, conservative in the Canadian market. We have 5 model portfolios to choose from, and 3 of them fit the bill for conservative and retired investors. And we'll look at the US model portfolios very briefly as well, but I want to key in on this model portfolio where you can see over at the far right, we are off to a really good start in the year 2020. So the year-to-date return is just about 10% already. And we've had a good steady equity curve going throughout the 6 years of the portfolio. So there's risk involved in investing. We know that, but everything you'll see in here today is for educational purposes only, should never be considered as investment advice. So when we talk about effective trading systems, there's really 2 things that we need. We should have a back-tested, proven track record of profitable trading results, and we need well-defined, clear, and executable trading signals. And we want to get those signals, early in the stock trend to take the most advantage. So Vectorvest model portfolios deliver this for us. And whether you are a new investor or a veteran, Vectorvest model portfolios give you a turnkey, complete trading system to help you achieve your financial goals. Even if you are a dedicated, full-on, do-it-yourself investor, you can use any of the model portfolios as a guide or simply a source of reliable trade ideas. And we have some subscribers who do just that. They look for the latest purchases in all of our 5 model portfolios and then choose the best ones that suit their investment style. So with that, let's go in and have a look. And again, we'll start with Canada and then we'll look at the US model portfolios just very briefly as well. But here in Canada, I've come right over to the Portfolios tab at the top right, and it's set to Portfolios Home. And right at the top right, we can click on the portfolio performance to analyze the long-term performance of these model portfolios. Now I've got the default sort set to CROR, the compounded rate of return, which is very important, especially if you're just starting out with a new portfolio. This gives you an idea of what you can expect on a year-over-year basis. The annualized rate of return looks much better, but it's the compounded rate of return putting money to work as we go along. So here we are with model portfolio number 4. It's the conservative model portfolio, and it turned $100,000 in January 3rd, 2012 over the 6 years into $352,000. So quite a nice return. And again, with that steady equity curve, it didn't happen all at once, but it was just a nice way to grow your wealth over time. The percent winners are about 50%, so it's not exceptional. But when we have a winner, the winners are typically deliver far higher gains than what we lose when we have a losing position. So it's certainly easy to make money when you have a 2-to-1, 3-to-1 reward to risk ratio. And the drawdown is fairly reasonable at 20.9% over the 6+ years. And I say it's fairly reasonable because we know we've had some fairly severe market corrections to 2018 and of course the COVID collapse in 2020. So 20% drawdown, that's the amount of risk or loss from a peak to a valley. It's just from a high to a low. So it's pretty good. So once we close that out, we can actually click on Go to My Portfolios. We'll want to click on Go to Vectorvest Portfolios, and it opens up our menu of Vectorvest Portfolios. We have 5 of them. You can see the 1-year performances. We have 5 in the green and 1, the prudent portfolio, which actually was the best performing portfolio overall over the 6 years, a 30% annualized return and 15% CROR, but it's been a struggle so far in the last few months, and they've given up a lot of ground. The model portfolio number 4, a dividend paying portfolio, up 17% over the year. And number 3, which is a dividend growth portfolio, up 27%. So very strong performances overall. And to get into some of the details, let's look at model portfolio number 4, just to give you the navigation tools you'll need to analyze these portfolios. So here again, it opens up to a screen for the model portfolio number 4. We see the equity curve on top. We see the current holdings. And because, I need to show you the trading system viewer, but we buy stocks when we have a confirmed up call, and we only sell stocks when we get a sell rating from the Vectorvest system. So there's our stop criteria. Its recommendation equals sell. And even if we go from a confirmed up call, which is our most conservative market timing signal where we buy stocks, we'll hold those stocks even through a confirmed down call as long as they don't get a sell rating from the Vectorvest program. The sell rating comes when price falls below a stop price, which is a moving average stop adjusted for the fundamentals of the company. So good quality stocks will get a lot more room to move before they're sold out of the portfolio. And you can see that here is Richelieu. It's the largest percent gain, purchased on January 5th, 2021, and up 54%. So it hasn't had a sell rating from the date when it was purchased, January 5th, 2021, until the current time. And here's Metro in the retail food area, and it was purchased on November 12th, 2020. The return on investment, the ROI, if I open this up a little bit, is 9.80, but it's been paying the dividend all the way along as well. So really strong dividend yields here. I can just right click and auto fit all the columns, and there's our dividend yields. So Great West Life and Power Corp both paying over 4% annual dividend and turning a nice capital gain for us as well. You can see the energy stocks have been important to the portfolio. Once energy turned around and started going up, the search found some energy plays here. Cenovus, Canadian Natural Resources, Paramount, and they're all double-digit gains from the point of purchase. So let's look at that trading system. And to do that, we'll click on the Details tab, and it'll give us the rules for the trading system. Again, it's confirmed calls, so a very conservative type of portfolio. We buy stocks only when we have a confirmed call signal, and when we have a confirmed down call, we just don't buy any more stocks while we have a confirmed down, and we manage the positions that we currently own and sell them if they get a sell rating. The fill mode, we use the search called Steady Eddies, find stocks that pays a dividend with well above average safety, and the stocks are sorted by value, safety, and timing, plus the dividend yield, safety, and growth. So this really combines the power of VST and the power of the YSG indicators. So a very strong sort for this search and this portfolio. And as I look at the parameters of the search, we need the relative safety to be greater than or equal to 1.25 on that 0 to 2 scale. So we're looking for the safest of the safe stocks, the steady eddies in performance, and good average volume. And you can see as I scroll down, the recommendation sell is the stop criteria. We try to maintain 10 positions in the portfolio and only 3 stocks in any single industry group to give us that diversification. So that is the trading system and the rules. So I can click out of that. We have an action plan button over here at the right. So if you're following along on this portfolio, you can click here to get the daily action plan. Currently, we're in a confirmed down call, so the market timing signal is bearish. Do not open any new positions. We simply sell any stock that gets a sell rating in a confirmed down, but we don't replace it until we get a confirmed up call. And then if I look at the reports, here's the transaction log of all the positions opening and closing. We have a summary report, which gives us the initial investment, $100,000, and the total value, currently $353,000. And year to date, 9.93%. So in a kind of a difficult start to January, this portfolio has performed quite well, even though it's not been adding any new positions in the confirmed down call for several weeks now. The stocks that have been in the portfolio have held up quite well. And there's the overall. You can see over 6 years, just 119 trades overall. And our best performer was ATD.B, currently called ATD, after they eliminated the voting class shares. And 42%, $42,000 gain on that one. So that's what I mean by letting the winners run and the losers, you sell before they really bring harm to your portfolio. So that's the reports tab. There's other information you can get in here. Diversification, the trade history is always useful to have a look at. So when I left click on that, and I can sort by percent gain. So here's where you can see the value of that sell recommendation. A good quality stock like ATD.B, 428% before it got a sell rating from the Vectorvest system. Dollarama, Auto Canada, and Metro, all triple-digit percent gains. And so there we have it. If I click again, we see the losers up at the top, and the 23% and the 20% losses are the largest losses that we've had. And certainly the number of winners does certainly supersede the losers. So I'll close out of that. So we've shown you the navigation of the portfolio and the important information from here. You can get the earnings dates in your portfolio, so you can make decisions around earnings time, whether to hold true earnings or not. And if I just highlight them by holding the shift key down, highlighting the top and then the bottom, I can right click and I can view the stock graphs. So I'm just set up to our Vectorvest simple graph layout with price, a 40-day moving average, the relative timing indicator, and earnings per share. This is a forecasted earnings per share that we can actually plot right on our graph. And Richelieu, this is over 9 months. Let's go 1 year. And I can also come up to the top and look at a weekly graph and maybe go 2 years out, for example. And there's Richelieu has done very well. And the energy stocks, they all started to perform well back in October, November, and December of 2020. And these stocks have kept going. But notice the earnings per share, typically all the way to the right edge. They're rising and growing their earnings. All right, so that is the Canadian model portfolios. Just very quickly again, I'm going to go to the portfolios home, just show you that portfolio performance once more because it's pretty spectacular. And even though not model portfolio number 5, Prudent, is underwater in January, here's the CROR 15% and the annualized rate of return 32%. So I think we'll be positive by the end of the year for sure, getting that 10 to 20% gain as it has done pretty consistently over the 6 years. And then finally, just one really quick look for those of you interested in the US market. Pull that up here. Just pull it over from another monitor. There we go. So this is the US database portfolios tab. And again, I can just left click here on the portfolio performance. And this will just give you an idea of how well these portfolios have performed. Now the money makers on a annualized rate of return basis and the CROR is not as strong as some of the other ones, but very, very acceptable. And it also is a dividend paying portfolio. So you can go through and have a look at these. The best performer so far is model portfolio number 3. And if I click on the model portfolios, you can see over the 12-month period, it's up 20%. And if I just left click on it over here to highlight it, there's the equity curve. Here are the current holdings and their return on investment so far. United Health, I mean, some really good quality stocks in this portfolio as well. So very strong performance. The trading system details, you can click on it and it uses the DEW timing system, buying stocks long when we get a DEW up signal, and it does short stocks when we get into a DEW down. So that's a look at our model portfolios. Again, you can use them as a guide or a gospel, or just cherry pick the stocks when they're purchased in the portfolio. You can have great results either way. And then if I come back to our PowerPoint, just to finish up, if you're new to Vectorvest, you want to give it a try and analyze these model portfolios and see if there's a fit for you. We have a special offer, 99 cents for a 30-day trial. Gives you all 5 countries in Vectorvest, including the US and Canada, Australia, UK, and Europe. And you get all the stock analysis tools and indicators, as well as our elegant graphs and a scanning tool called Unisearch. And you can just go to vectorvest.com, click on the risk-free trial, or call our support team at 1-888-658-7638. And if you like this kind of video, just make sure you click on the like button and drop us a comment if you like. And if you wish to get a hold of me with any questions, it's stan.heller@vectorvest.ca. Thanks for watching, everyone. Take care.